Hello and welcome to FinextraTV. I'm Hannah Wallace and we're here at Money 2020 in Las Vegas. Kindly joining me now to talk a bit about innovation is Jeremy Balking, Head of Innovation at HSBC USA. Hello Jeremy, thank you very much for joining us.
Thanks Hannah, and good to be here.
It's good to be here too. So yes, innovation, to start off then, can you define it for us?
It's a great question. I think when I joined HSBC, I was told by my CEO, Jeremy, you're a stallion, go and run, which was no small task considering how the need for innovation within banking. So the first thing we did was define the term, and for us, we define innovation as doing something differently that creates value. The key thing is changing the status quo business model or idea or paradigm, but it has to add value, whether it's value to your shareholders, value to your customers, value to your employees, or a whole bunch of stakeholders down the line. You can't manage what you can't measure, and I think one of the mistakes I see my peers and other companies doing is innovation is really hard to measure if it's not defined.
Sure.
And that's why I think it often gets misunderstood and it's not as effective as it ought to be. We've taken a different pathway, and that's why I think we've been successful.
Sure, and there are lots of struggles and challenges around innovation and implementing new technologies. Do you think banks are well equipped around innovation?
I think innovation is more than just implementing new technologies. I think if you think about the definition, doing something differently that creates value, every single person in your organization, whether that's people in your call center, people in your IT, people in your security, people in your C-suite, people in your reception desk, your customer-facing people, your back office, can do something differently that creates value. Innovation should be in the DNA of your firm. Now, I think banking as an industry has probably lagged other industries in terms of innovation and certainly digitization in some ways. I think the average person on the street would make that case probably quite persuasively. I think that's why we need to change that. If you think about the history of HSBC, it was two dudes from the UK, were in Asia, had this audacious dream with this startup in 1865 to finance trade with the US. In many ways, HSBC in 1865 was the Amazon of its day.
Yeah.
So I think that was the ultimate startup. 154 years later, I think it's still in our DNA. We've reactivated that, and I think we've led the industry in some of the stuff we've done, being the world first in some of the use cases and execution. That being said, a rising tide lifts all boats. It's not about one company or one bank. We all need to do it because we owe it to our customers to help them bank when, where, and how they choose, give them the best services, and ultimately our people, our frontline staff, giving them the tools they need to be more productive, more efficient, and have a high utility and satisfaction, because we want people to love banking again.
Mm-hmm. Make it fun as well.
We just want people to love banking, whether that's customers or employees. It's an unloved industry and has been so for the last 10 years or so. There's many good reasons and bad reasons for that. We need to draw a line in the sand and go back to what we do best, which is to help people finance their hopes, dreams, and aspirations. We've got an important role to play in the community and the financial services allocation of capital. And it's time we get back to our roots. We implement innovation to do it faster, quicker, more efficient, and more secure for our customers. And I think that's the race we're on. This is an arms race.
All right, and I'll ask you a bit more about how the role of banks is changing in the future, and building on what you've just talked about. Could you give us some examples of transformational innovation?
I think the role of the bank has definitely changed. I mean, we look at our colleagues across the pond over in Europe. Clearly, open banking is a real thing. I'm from Australia. Open banking in Australia is one of the other markets where a lot's happening. I think the US is lagging for a bunch of reasons, although I think there's a recognition in the industry that the role of data and how we use that, how we store that, how we potentially monetize that, these are issues that are in the community that are real and present today. And I don't think they've been really solved for very well. That said, I think banks have a competitive advantage actually as the metaphor for trust, to have a key role to play in that. I think secondly, banks have changed because the nature of what a customer tends to use a bank for, and then how, has clearly changed with the advent of the mobile, with the desire for payments. Millennial customers the world over who have a different need for financial services. They've had a disaggregation of financial providers for different things, a credit card here, a checking account there, a savings account here, sort of in that economic J-curve of normal economic activity. I think as we see a more normalization of that behavior, that it's clear that the way the bank has adapted itself is going to change. We've spent as a firm $2 billion on our retail transformation program that ended in 2017, but that didn't mean we stopped there. In fact, that's where innovation needs to kick in and go further and start shooting for the pins, as it were, because customers and the pace of change and the expectation of customers in this modern world has never been slower, and it's also never been faster, and it's not likely to get slower.
Sure. So
from that perspective, we need to recognize that we need to move faster to deliver for our customers, because there are many more competitors out there in the marketplace, and it's getting more and more tough to win the hearts and minds and deeper relationships. But I think, again, the bank has a role to play as an advantage to a fintech who are monoline service or product line, whereas a bank has the wallet essentially. And there's a ton of other things, whether it's what we did with robotics, wearable tech, building a mobile lending platform to let customers here in the US get a personal loan on their mobile device, a 3-minute application, 60-second instant credit decision, funded within 24 hours. This has never been done before in the US, and we're really proud of that.
Yeah, it's really exciting stuff. But what about the relationship with fintechs? We've all heard about how they were sort of competitors at one point, and now we're coming together. What does the future look like in this space?
Well, Hannah, we're here at Money 2020, and if I remember back sort of 3 years ago, it was all about the fintechs taking over the world and destroying banks. If I remember last year, it was all about banks and fintechs collaborating, and I don't even know what the topic is this year, but all I can say is that if we're still talking in 5 years' time about fintech and banks, we both lose. We have to collaborate. What we've done at HSBC, we've led the market and the HSBC internal market, I guess you might say, from the US with partnerships. We think of ourselves as a platform, almost a platform of platforms, and that's why we partner with, for example, Amount to build a mobile lending platform. That's why we partner with SoftBank Robotics to put the world's first social humanoid robot in a bank branch. That's why we partner with Samsung on the world's first deployment of wearable tech in a bank branch. That's why we partner with a company called Milestone for software-based investment advice. And the list could go on. The point being is, I think banks should focus on what banks do best, which is being the safe, secure, reliable source to store capital and to have customers access that and to lend. I think ultimately the best talent tends to be in the technology sector. So therefore, partnering is much more preferable in many cases. It's faster to market. It's often more efficient use of capital. There's better accountability to hire and fire the fintech, as it were, if you're not getting success as you might desire. And candidly, you can just get to market faster through partnership. I think the alternative view in corporate America, and certainly banking, has tended to be, let's build it first. And if we can't build something, let's buy it. Let's overpay for something. The last thing we should ever do is partner. And we at HSBC have sort of taken a different view here in the US, because we think partnership is optimal, and we're really proud with the bold approach that we took as a leadership team. And now we're seeing conferences like this all talking about the values of partnership, and we're kind of taking partnerships and moving them to the next level. And I think that's what customers expect.
Yeah.
At the end of the day, we're all sharing the same customer. We're all sharing the same customer. So I think less of this sort of dog-eat-dog mentality and more of this collaboration mentality. And it's not a cliche, by the way, it's true.
Yeah.
When we partner, we've proven it in our business model. Customers are just more engaged, more happy, and are ultimately more loyal.
Better off.
Better off.
Yeah. Well, Jeremy, thank you so much for sharing your insights. Certainly some exciting developments ahead as well. I'll let you get back to the event. Thank you.
Thank you, Hannah.